Market news now. Global shares rose, nudged higher by a rally in Japanese stocks as the yen sagged to its weakest since 1990, while the dollar held mostly steady in a holiday-shortened week that ends with a key reading on U.S. inflation. Meanwhile, traders are trying to gauge which of the big central banks will be the first to cut rates in 2024. And commodities news, crude fell for a second day after a report that crude stockpiles surged in the U.S. and on major signs that some of the producers are likely, or rather unlikely, to change their output policy at a technical meeting next week. To give us perspective from a fixed income side of things, we are joined by James Turp, who is a fixed income portfolio manager at Sanlam Investments. James, thank you so much for your time. We've got the Reserve Bank decision in about an hour or so, but it might be boring. We're expecting rates to stay unchanged. What will you be paying attention to when it comes to guidance and tone?
Thanks for having me, Nastasha. Fixed income's never boring, though, is it really? There's so many moving parts, so many things. Watching your program for the last little while, of course, all the political developments locally, so there's lots to consider. Big risk event-filled year. So when we look at the MPC a little bit later, of course, we know the governor, the Setshego, is towing a very hawkish line in all his commentary in the media, saying that rates are going to stay higher for longer. He'll be concerned about capital flows and keeping real interest rates high, as he always refers to. So I think the place to look will be what they call the QPM. That's the model that indicates the path of interest rates from here. Sometimes they even refer to it as another member, since it provides that sort of guidance. So the devil, as they say, will be in the detail, because I think we can expect a unanimous vote for holding interest rates. If for any other reason, it will be the elections coming up and the potential for volatility in the markets, and try to avert that by keeping business as usual at the moment. And I think also inflationary developments globally, and certainly here domestically in our CPI figures, were enough to justify a cautious hold for now.
I was talking about central banks and traders trying to figure out which of the central banks will cut. But when it comes to the Fed, following that meeting we had last week, has anything changed for you when it comes to your optimism levels for rate cuts?
I think my optimism in South Africa is a little bit different to the market when it comes to rate cuts. We can discuss that just now. I think looking at the global picture, Europe looks like it's being priced to cut sooner than the US at the moment. Of course, their economy not as strong as the economy in America right now. But when we look at the American pricing for cuts, the first one lies somewhere between their June and July FOMC meeting, that rate setting meeting. So for the time being, that seems a fair distance away, and perhaps it's just a little bit too far out. Maybe there's a possibility, should data change, and of course it comes through quick and fast, that they bring those cuts a little bit forward. Who knows? It all depends on the developing picture globally. Of course, you referred in your opening to the oil price coming down. Now, that's a big one for inflation, and often also an indicator for demand in the global economy. So there's a lot of moving parts. And I think for now, it's probably at its most conservative pricing of interest rate cuts a little bit far out, maybe some scope for those to come a little closer in the coming months.
When it comes to the SA fixed income space, then where are you seeing opportunities, yield compression, etc.?
Great question. So firstly, if we look at what we're expecting for interest rates here, there's only one interest rate cut of 25 basis points, and that's priced in to the end of the year in November. So I think, should that position change internationally, and should we get through the elections with a relatively peaceful and market agrees and digests the results politically in South Africa, and that everything is sort of stable, then if we do get a June cut by the Fed, for example, or an earlier one, say from ECB, it could make July in South Africa an opportunity for our central bank to cut rates if everything else plays ball, currency stable. Because, of course, they're aware of the state of the economy, the potential for growth in the economy, and they'll want to try and balance that in their monetary policy stance. So there is a chance for that. But saying that also, I don't see a deep cutting cycle in South Africa either. I think we've got to keep those real interest rates higher for longer, as we'll hear from the governor, because he wants to keep capital flows here. So, as an investor...
James, unfortunately, I'm going to have to cut you there and just cross to Nompumelelo Siziba just shortly.